So we all know that the tax code did drastically change for 2018, and there are still some changes being done. Today we're going to talk about some areas to keep in mind before year end that could help you with some tax planning for 2019. My name is Tony Cameron. I'm with TLDR Accounting. We are a strategic tax and accounting partner for small business owners, freelancers, and non-for-profits. We help simplify your taxes and accounting. Today, we're going to talk about taxes and accounting. More to the point, some of the changes that happened with the new tax code. So the first area we're going to touch on just quickly, because some of it remains the same and some of it doesn't actually change your taxes but could be a planning opportunity for the future. So educational area, it did change. We could go it could be its own video with the complexity surrounding it. There are still 2 tax educational credits. The American Opportunity Credit, that's for your first 4 years of college, and then the Lifetime Learning Credit can be used for any type of educational. The big thing is to know that you're going to use it and to have the information needed. So information from the school, tuition paid, your tuition statement. You'll need all of that to claim the credit, along with just what were you studying? Is it a graduate degree? Are you just taking some courses? Is it your first 4 years? So just keep those in mind. The other big educational area that changed, which isn't a tax deduction but is still something to think about, is 529 college savings plans. So they're an account, you toss money in it, it grows tax-free. It's kind of like a Roth IRA but for education. They changed it, so it doesn't just have to be used for college. It can be used for any level of education. So say you just have a baby and you know you're going to send them to a private elementary school, or they're going to go to private school for elementary, middle, and high school. You can now contribute money to that 529 plan and use it for those purposes. Still, from birth to when you would join those programs, it doesn't have a lot of time to grow, which is where the benefit of the plan comes in. Because if you're, say, contributing it for college, that doesn't happen until 18, 19, 20. You have that many years to have it grow tax-free. But that is a change. You can now use it for any level of education. Now, the other area that changed was mortgage interest. You still can take the mortgage interest deduction, but now if you purchase a home, you can only take the mortgage interest up to the first $750,000 of loans. So before it used to be up to $1 million, now it's only up to $750K. What that means is if your loan is over that amount, we do have to prorate the interest that you paid for only the amount for the first $750K. Charitable contributions, we talked about this a little bit in a video. I would refer you back to that video. Medical expenses. So as is, it's really hard to get the deduction for medical expenses because it needs to be above a certain amount. That amount is 7.5% of your AGI, but it's increasing to 10% unless Congress does something about it. So just keep that in mind, that medical is still really hard to get, and it's going to get harder unless Congress changes something. The other big item of note is real estate taxes and state and local taxes. There's no cap. So now you can only take $10,000 of state and local taxes, real estate taxes, sales taxes. All of that is now, the most you can take is a $10,000 deduction, which is frustrating if you live in a state that has high sales tax, say like New York, California, or Washington, and you also have high real estate taxes. More than likely you're going to hit that $10,000 cap. Now, there are some fantastic things that did happen because of the code. It depends, though, if you're an individual versus a business. I'm only going to touch on this, but if you are a business, there's now a 20% pass-through deduction. You need to go talk to a professional to really dive into the deep part of this and see if it's applicable to you. But if you're a small business owner, a freelancer, someone who's not just an employee, you should go talk to your tax accountant and get some more information about this. And is it applicable to you? Can you use it? Is it going to affect your taxes? And that sort of thing. If you've been a self-filer for a couple of years, this would be the time that you should go talk to a professional. You could be leaving money on the table. I don't like people leaving money on the table, so go talk to someone. Doesn't have to be us. Go talk to someone else. We don't care. Just make sure they know what they're talking about. Now, that was a good thing. There are some not so great things. Theft losses are no longer deductible. So if someone robbed your house, robbed your business, it's no longer deductible. Same with moving expenses unless you're in the military. Moving expenses, no longer deductible. A tip from us is keep contributing to retirement. Retirement hasn't changed, so you still get the deduction for it. Make sure you're contributing. It helps future you. Now, I know we quickly covered a whole bunch of areas all over the code. The big thing to keep in mind is if one of these areas does sound like something that you had going on in 2019 or you will in 2020, go talk to a professional, get some advice on your specific tax circumstances. Overall, not too much has changed from 2018 to 2019, but there's still stuff going on in Congress, so there have been little changes here and there that have affected some things. The big one is if you are a small business owner, go talk to someone. That 20% deduction is pretty high. All right. If you found this helpful, you can subscribe to our YouTube channel. We also have included a link to our article about all of these topics, which goes a little bit more in depth. I know we moved quickly over several of them. And then also, if you want to join our mailing list, that is where we send out first notices of any free webinars we're putting on, any paid classes that we're doing, or if we have any open slots for our tax preparation. It is looking like we are going to cap before the end of this year for 2019 taxes. So if you're interested in that, join our mailing list, and hopefully we will talk to you soon.